Hey y'all, it's Moon Thomas, your social media insurance advisor. You are officially plugged into the Big Insurance Connect. On this episode of the Big Insurance Connect, I had the pleasure of speaking with my colleague Patrina on the topic of long-term care. She's an expert in this area and super passionate about being a resource for her community. Let's check it out. How are you doing today, Patrina?
I am good. Thank you for the invite. I really appreciate it.
Oh my goodness. You know you're welcome here. And I really appreciate you wanting to come to have this conversation, because I believe people do not know enough about long-term care. And I think that it deserves, to have some light shed on it right now. So let's just get into it. What is long-term care?
Well, long-term care is what takes care of you when you're not able to perform your daily activity, which is like your bathing, showering, toiletry, being able to get in and out of bed without some help. So not being able to do 2 out of those 6 things, that will require a long-term care event. Also like stroke, a heart attack, cancer, things like that, that's going to disrupt your life for a long period of time.
Okay. So basically it's somewhat like a policy that will help you to cover those expenses so you don't have to pay for it yourself.
Absolutely. And you can, whatever you have saved for your retirement, you will not have to be able to take your retirement money and pay for your medical needs. It had to be a separate policy to be able to do that.
You know what? I actually had a client of mine that I ran into this kind of, a long-term care event situation. His wife had or has Alzheimer's, and he literally, he was just heartbroken. He told me like he has spent about $300,000 of their money, which really was for savings and for retirement, for, her care.
Absolutely. And the thing that people do not realize, there's 2 things. They think once they get on Medicare, that stuff is taken care of. That is the one thing that they believe. And also they think that they'll just be able to use their savings or whatever. And that is not the case. That could be the case, but it's going to take away from whatever life dreams that you had or still being able to want to do, or it just takes away from your income. And you should be able to have a separate policy to be able to do that. And then, people just do not understand how long-term care really works. And so they find out when they're in need of it, which is way too late, unfortunately.
Yeah. And it's the same thing like with the life insurance policy, the same concept. You really should be getting it when you're healthy and you get something that you can afford, and it should be able to cover you if, God forbid, something like that happened to you. You are certified in long-term care now, and congratulations on that.
Thank you.
Since you are the expert on this on our team, I really wanted to, kind of bring some awareness to it, because people right now are living longer. They're having to find some additional options. People are leaving from maybe even group insurance or their corporate world and needing to have some protection outside of that. Can you touch on that a little bit more? Because I know like a lot of the, boomers right now are taking care of their parents.
Absolutely. And they're having to come out of pocket. And so when the boomers are taking care of their parents because their parents aren't financially able, then they're taken away from their retirements to taking care of their parents. And so they're starting to think and say, oh my gosh, what am I going to do when I get that age? Are my kids going to be willing to do the same thing? And then also, people, like you said, people living longer. And so they're having the chances of a long-term event increases substantially because you are living much longer. And even if something happens to you, with all the life-saving measurement, you usually will live and not just die right away. So those are things. And then one of the other big misconception is thinking, okay, well, if I become disabled before 65, not already starting or 62, not already starting your Social Security. And then the Social Security office has to decide that you're disabled. And sometimes that can take anywhere from a year to 2 years. And most people have like long-term or short-term disability. Well, that can run out, and it's only a percentage of your paycheck. So if you're making something and you're living up to 100% of your paycheck, just imagine if they only give you 70% of your paycheck. what is that going to do to your financial? So while you're waiting for Social Security to say that you're disabled, you might have lost your house, might have lost your car, unable to go to the doctors and things like that. So it's like a domino effect of what your life can be about by just not preparing early enough to make sure that those things are taken care of, that it won't disrupt your family so greatly. So those are the things that we talk about.
Okay. I mean, I'm glad you are bringing up, these are some great points, because I just, like I said, I really am doing the Big Insurance Connect to be a resource, to be able to, give information. What qualifies you to get long-term care?
Well, of course, the better health you are, the cheaper the policy, the weight and things like that. And so most people really start looking at long-term care is about 40 or 50. The earlier you can get into it. And so they have different kinds. They have a standalone, which is just for long-term care. And then they have it where it's bridged with life insurance, and they have on there as a rider for long-term care. So those are two options, a way to be able to look at getting long-term care. And like I said, the families are starting to realize how important that is as far as their financial portfolio, because they're seeing how much is eating up moms or dads, and these assisting living places are a fortune and things like that. And the one good thing about having your policy is that you can decide a lot of the policy, you can decide who your caretakers are going to be. So it could be a family member to be able to help out, being able to care for you, and it's whoever you want to, and it comes to you, and you're able to directly pay for that. Because if you don't do those things to be able to qualify to a nursing home and things like that, you have to spend your money way down to where you're giving away stuff that you have worked so hard to have. And a simple policy could avoid some of those tragic events that can happen. And so there's a lot of flexibility with long-term care and even with disability insurance, because, life happens, as they say. Life be life. And
the key point is just the fact that, when you need it, it's too late to get it. And if you get it early, it should be more affordable, because, it's based on your age and the amount and things of that nature. Let's back up a little bit. When you were saying that you can, elect to have your own caregivers, there is, some type of analogy between, improving your health and being able to, recover at home or something of that nature. So I think that's important, that if you could, because most of the times it's a spouse or, a close family member anyway that's having to take care of a loved one in a situation like that, especially if finances are an issue. So that would be a great way to be able to compensate and be able to, kind of kill two birds with one stone. So this is something that, these are riders that you can put in a policy, or is it just the way that it's written that says you can just pay caregivers?
Absolutely. Just like life insurance and Medicare and things like that, it's always changing and getting better and better for the consumer, because a lot of these policies that have bad names on them from a long time ago, and that it didn't have the flexibility that it does have. And so they have taken into what consumers are saying about the different policies, what they liked and what they didn't like. And so they're implementing this and updating it. So the strategy is to be able to say you could pick that the insurance actually pay you, and then you pay whoever you want to be able to caretake you, as long as the doctor has certified that you have been disabled for 90 days. And let me just say this, it's not just on, like, if you had carpal tunnel surgery that you're going to go back to work. It has to be a life-changing event that lasts at least 90 days. And some of the policies will even pay you back the 90 days from your start, even though you have to wait the 90 days, they will go back and pay that and be able to implement that. And then if you feel like your long-term care, you want $3,000 a month, you could put that into your policy. Or if you want $2,500 a month, and maybe you do have some caretakers at home that can be able to help assist you. So you're able to say what it is that I want to be able to take. So those policies can be catered for your particular need, your budget, and what you would like to see. Because I would hate for somebody to have so much retirement built up, and they thought that they were going to either be able to leave some behind, be able to do some things and traveling and things like that. Because sometimes when the spouse does pass away after caring for them, they might be good and healthy, but now they're cash strapped. because they have used all of their nest egg on taking care of the one in the long-term care. Those are the scenarios that we're trying to get away from, because like I said, just like you found the guy that spent over $300,000, I have run into people that did not plan, and they're almost 62 for Social Security, but they're having to wait, and they're having to find lawyer to go in there and get the Social Security started earlier. If I could just touch on one more thing, people that are independent, like myself, like you, Moon, that does not work for a company. These are things that we have to take care of ourselves.
Yeah.
So, the beautician, the bricklayer, the plumbers that maybe be independent, the people that cut your grass. These are people that really need to be having these conversations, because they don't have long-term care. I mean, they don't have short-term or long-term disability at their job. If they don't work, they're not making any income. So this is vital for people it's vital for everyone, but the people that are really they own their own business, this has to be a part of your financial plan, because it can wreck you later on in life. Very, very much so.
It's like one thing, like if you have life insurance, but if you don't die, then what happens? You know what I'm saying?
Right. Absolutely.
And the other part about it is you could technically get a hospital indemnity plan, and you probably need that too. But a hospital indemnity plan will only pay you for a certain amount over a certain period of time. But if I'm hearing you correctly, a long-term care will be like, this is X amount of dollars that's going to go towards this type of event if it happens. And that would be a lump sum of money that you would get as if you are cashing in some type of a life insurance policy, but it's for your care if you have to go more than 90 days. Is that correct?
Absolutely. And sometimes it could be on a monthly pay, and then sometimes it could be on a yearly pay, just kind of depending on what, options you have. And I caution you to say, well, I can't afford that, or I can't afford this. But I guarantee you, it's just like in life insurance. When somebody don't have it and they need it, they be like, oh, I wish I would have looked more into my budget to be able to do these things. And these are just part of financial planning to make sure that you're taken care of. Because like you said, we are living longer. Somebody can have a stroke today and live another 5 or 10 years, even dialysis, once the quality of life depreciate, but an average person can live anywhere from 7 to 10 years on dialysis. So these things, because of modern medicine, which is on the good side, but on the bad side, we're not having enough money to take care of ourselves without having to be impoverished. And I would hate for you to be working and staying in a certain lifestyle, and then something happened to you and get sick. All of us are aware of the COVID crisis.
Right.
Some of us had long haul COVID. Yeah. And they was in their 40s.
I was one of them. At the end of the day, and this is just good information to know. It's good to sit down and kind of like every now and then reevaluate what you currently have. Is it serving you? Do you need something different? I really do appreciate you taking time to really shed light on this. We're scrolling your website. If anyone wants to reach out to you to get a quote or, a consultation about their situation, or maybe just get some more information about long-term care. Thank you so much for being on today, Padrina.
If you enjoyed this episode, do me a big favor. Please like, share, and subscribe to the #1 insurance resource that has you covered from the womb to the tomb for all things health and wealth. Until the next time, I love you and I mean it.